All right, good afternoon, folks. Today is October the 15th, 2022. It's now about 3 p.m. on a Saturday. Tim Davis coming to you guys with another weekly market review. And I want to start out by jumping right into it, looking at the S&P 500. This is a 6-month daily chart of the S&P. And as you can see, we are trending downward again. After we hit that, try to get the market try to do a little bear market bounce, or bull market bounce, dead cat bounce, or what I call it, back in June. So we got a nice bounce off the lows in June, all the way up until about the middle of August, and since then we have started to trend downward. And right back at those the area of the lows that we've seen in June, we started to bounce around that area. And one thing I'm gonna point out here, notice how price action is trying to bounce around that area, but this time, instead of having a nice rally back above the 20 per moving average, the 20 per moving average has been acting as a strong, and I do mean a strong level of resistance. So while price is mannering around these lows of that we've been seeing in June, and even dipping below it, the market has been trying to fight off dropping below too far below these June lows. But every time it's done so, it continues to run into 20 per moving average. So price action continues to run into that 20 per moving average and gets rejected. And last week, Friday, between Thursday and Friday, that was the biggest I think it was Thursday when we had the CPI data. Biggest one-day move in a very long time. See, that was extremely volatile. That was an extremely volatile day. And even with this big green candle on Thursday, turn right back around on Friday and got rejected right at the 20 per moving average. Big time rejection right at the 20 per moving average. So what could we see moving forward? 20 per moving average has been a strong area of resistance, folks. So, and I'm looking to possibly see lower prices again as we head into next week. Okay, unless the market can make a strong push above this 20 per moving average, it's like this is going to remain intact with the 20 per moving average acting as a strong area of resistance. It looks like the least path of resistance is lower. And if that's the case, then the next setup, let me draw this out just a little further. Then the next setup will be for the S&P as a test of the 2020 highs. So next week is going to probably be another interesting week. And if the market can't find a way to rally back above this 20 per moving average, we're looking at a possible chance that we can start testing the 2020 highs and possibly breaking below that. So we're going to have to pay very close attention to how the volume is next week. If we start to see the market start to continue to fall as we go into Monday and Tuesday, and the volume picks up at the same time, that means that's going to be increased selling pressure on the market. That means the bears are getting more and more motivated. So we have to see how that pans out. So that's a look at the S&P. Now let's take a look at the Dow Jones. All right, take a look at the Dow Jones, same scenario. Price action made it right back up to this 20 per moving average. And then what happened? Big green candle on Thursday, rejection on Friday, right back up to that 20 per moving average, as we did here, as we did here, as we did here, as we did here. 20 per moving average is starting to act as a strong level of resistance. Will we get a rally and rally back above the 20 per moving average to start a new bear market bounce? We had to see. We had to see. But if we don't, if we continue to get rejection right here, this 20 per, we're going to be heading for lower prices. And again, it's like that is probably the more likely scenario, being as though the market has struggled. Here is that June, the bounce off the June lows. The market has struggled to maintain a bounce from those June lows now. Look what's happening. We are dipping below those June lows, even on this Dow Jones, dipping below those June lows. cannot sustain a rally above the 20 per, continue to dip below those June lows. And eventually we're going to break down and break all of these attempts and start to head lower to drop below the highs of 2020. So next week is probably going to be very crucial, a very crucial test for the markets. And if we was to draw this out and take a look at a weekly chart of the Dow, we're already there on the Dow, folks. We're already about to test a possible break below the 2020 highs. And if that happens, you know, we're going to see probably maybe see and end up seeing an extreme sell-off. So there's the 2020 highs, the Dow Jones. We are right at that level, just testing it, with the 20 period moving average acting as a strong level of resistance. So for some reason we just can't rally back above this 20 period moving average, we could possibly see a big decline. I mean, probably a big decline before we get maybe a rally up to test that breakdown level. So we got to see what happens next week. Next week is going to be a very crucial week for the markets. Now let's take a look at the Nasdaq. Quick look at the Nasdaq. Same scenario. Same scenario, right back at that 20 period moving average, and then a rejection. So a big green candle and then a rejection, right back at the 20 period moving average, as we did there, as we did there, as we did here. And you get the picture. So the 20 period moving average has been acting as a strong level of resistance, like we want to turn low again. Again, we are getting very, very close. I mean, extremely close to all the major indices. Starting to test a break below the highs that we've seen in 2020. Here is the highs of 2020 on the Nasdaq right here. And this is where price action is right now. Like, we are slowly but surely trying to find a way to break below that level. Let's see what happens on next week. Do we get a reversal and a rally? We have to wait and see. Right now, it looks like the bears are trying to really take full control of this market. And next week will probably be the determining factor. Now, one more we take a look at is the Russell. All right, here's our Russell. Again, same scenario. Here is the highs of 2020. Here is the lows of 2022. We're right back at that low that we seen in June. Got a bounce there, and we're right back testing that level now, which is also the highs of 2020 on the Russell. Do we break below this level next week? We have to wait and see. That is a strong possibility, folks. So got to see how this pans out. Right now, again, the 20 period moving average is acting as a strong level of resistance. So price action is having a difficult time maintaining a break back above this 20 period moving average. So, and as you can see, as we getting closer and closer to these support levels that we've seen in June, with the 20 period moving average rolling downward, there's possibly going to be a strong level of resistance and some catalyst that's going to help push price action really below the 20 period moving average and below the highs that we've seen in 2020. That's where we stand with the major movement averages. Let's take a look at one more thing, which is the VIX. And the VIX is doing something interesting, folks, which would lead me to believe that we're going to see lower prices. So all these dash lines you see me have up here, those are just targets that I think we're eventually going to take out on the VIX. So the VIX has started an actual new upward channel, trending channel, folks, and a steady one at that. So price action, as we seen back in June on the VIX, followed the 20-period moving average downward. Now it looks what's happening. 20-period moving average has shifted, and now it's trending higher. So what is price action doing? It's following 20-period moving average higher. So now the VIX is in this steady upward trended channel. So we pretty much just in a snaking higher fashion. Every time the VIX pulls back to this 20-period moving average, it's like it's getting a bounce. So we broke above the 20-period moving average here, pulled back to it, and got a bounce. Dropped down just below it here, got another bounce. Pulled back to it here, got another bounce. Big bounce there. Where to? Back to the 20-period moving average, got another bounce. Where to? Back to the 20-period moving average again. Do we get a bounce here? I am in the camp to say we do. I think the 20-period moving average is starting to act as a strong level of support, which is just the opposite of major indices. So this 20-period moving average is acting as a strong level of support. So we could see a bounce off this 20-period moving average for the VIX, which could take it above these highs possibly. And that would spell downward pressure on the overall indices, especially S&P. So that's where we stand at with that. We're going to take a look at one more thing before I end this session. Even though I think crude oil is eventually going to find a way to march higher, I think crude oil right here also, it's in a battle. Here's a daily chart on crude. Look at that. It's pressing downward on its 20-period moving average. Could we drop back below it, head back to 80 or even lower? That's a possibility. So I'm watching that carefully. But I think if we do end up pressing below this 20-period moving average, I think crude is going to find support quickly because there's a lot of things in force that's happening across the globe that's probably going to push crude oil prices higher. But for now, I think crude is looking for support again. It's like it's heading downward. And if it doesn't find support here at this 20-period moving average, we could see crude drop back towards 80 before we see another run. Got to see how that pans out. And then one last thing to take a look at is the Spxa, which is the tool I tell you guys I watch to track the overall movement or the breadth of the market. Spxa 200R. And folks, it also is about to have another rejection right at this 20-period moving average. Like it's about to head lower. That's what the daily chart looks like. Looking at a weekly chart, price action. The percentages are below the 20-period moving average. It looks like it wants to continue lower. Looks like the 20-period moving average is acting as a strong area of resistance, so we could be heading lower there. And let's look at one more tool before I go out for real this time. Here is the tool that tracks the highs and lows at the end of each session. This is one that I have pinned to the top of my Twitter page. This is the Wall Street Journal markets highs and lows for the day. This was last reading was taken on October the 14th, which was Friday. So pretty much it shows you the highs and lows of the day, which is also another way to take a look at the breadth of the overall market. So granted, New York Stock Exchange, which is this first tab here, shows we had 77 new highs on Friday. But if we scroll halfway down, you'll see how many new lows we had, which would pretty much tell you who's in control of this market. 352 new lows versus 77 new highs. So it looks like the bears are still in control of this market. The overall breadth of the market is still negative, even with all the movement we've seen on last Thursday and between Thursday and Friday. Look at the Nasdaq. I'm sorry, that was the Nasdaq. Let's look at the New York Stock Exchange tab. I'm sorry. So the first tab we looked at was the Nasdaq. Now it's the New York Stock Exchange tab. 29 new highs the market created on Friday, and then we scroll halfway down, we'll see the new lows, 219 new lows. So the breadth of the market is still negative, even with the big old bounce we had on Thursday, reverse we had on Thursday. Breadth of the market, overall market is still negative, and the VIX is showing a upward trending channel. So just keep that in mind, folks, as we go through next week. There's a lot of uncertainty within the overall market because we still know we're still in the bear market, and there's still a lot of economic news and data that is going to put pressure on the Fed for the Fed to continue to raise rates. continue to raise these rates. So as long as the Fed has a mindset to continue to do what they have to do in order to bring inflation down. That's their mandate. They said they're going to stick to it. So the Fed is going to do what they have to do, or do what they feel as though they need to do in order to get to their inflation target. So with them continuing to raise their rates, with their ultimate goal is to kill inflation, they're going to continue to raise rates, folks. And the markets are going to continue to be a precursor of action from the Fed and global economic news or global economic events that are occurring across our globe. All right, folks, that's all I have for you guys for this weekend. Enjoy the rest of your weekend, folks, and I will check you guys out later in the week next week.